All right, welcome everybody back to Investor Central Club's STAX AI backtesting. We do this every single month. Wanted to go over some things with you guys in terms of January's numbers and some additional data that we've collected from our previous backtests. A quick little thing I do want to point out, we've noticed recently we had a few of our members let us know that some of our emails that we send out in our weekly newsletter has been going to their spam folder. So if you are one of those people, double check your spam folder. In the case you haven't noticed, we've sent out a few emails recently. Make sure that we are no longer on that spam filter on your Gmail and Yahoo. If you are one of those people that likes to receive our newsletter, likes to see what it is that's going on with our Discord, with our STAX AI, and the news that we have coming out for you guys on a weekly basis. In addition, I will include the newsletter link if you guys want to sign up for that. That will be in the description box below. Now, what I do want to point out with our STAX tracking system, for example, this month we do have our politician tracker that is now available over the course of the last month, where you can go ahead and track Nancy Pelosi and other senators and other politicians, what they're buying and selling. Now you have a way to see what's going on in there. We also do have insider trades. It's on deck, not quite released to the public just yet. We're still testing out, going through some final bugs before it will be released. But please stay tuned for that. You will be able to see what the CEOs, the insiders, the accounting officers, etc., what they're doing and what they're buying and selling in terms of the different tickers that you see as well. Now, for the reason that you guys are all here, we're going to go over the month of January in terms of our STAX AI callouts, and also talk a little bit about some things. If you guys didn't get a chance to look at our video from the last one, where we sat down with GeoMarine93, or known as Matthew Brigham, we had a chance to sit down. He asked us for some of our data and was able to translate it into some usable numbers for us, and I will definitely make sure that we go through that today so you guys can get a better understanding of how to use our STAX AI software. With that being said, let's go into these numbers today. What I do want to point out here is that, looks like something just happened here. We'll fix that up in a little bit. Let's see if I can fix that right away. No, all right. I'll get back into that later. What's going on here is we do have our numbers from January. Our numbers from January, we had 16 callouts by STAX AI. Of those, 15 of those are winners already. The one that was a miss was this MicroStrategy one. But keep in mind too, with the update that we just did, most of these were retested on February 1st. So these last three over here on the 30th of January didn't really have too much time for them to move so far. So some might consider these to be on deck, and otherwise you would say out of our 13 callouts, we have 13 wins so far. Those ranging anywhere here from about 17%, you see 17%, up to as high as 490%. Those of you that were in on this BABA trade with us, it was heavily called out in our Discord, and we had quite a few members bank quite heavily on these, 490% in the course of less than 2 weeks. Overall hit rate for the month is 93.75%. On average, 64.99% returns on average for the month of January. Another thing I do want to point out, if you go look down here, I have 57 updated prints. That does not include these January ones. 57 updated prints, meaning that 57 of our previous callouts from previous months have actually gone higher than where they previously were. So for example, Amazon, SE, Coin for Coinbase, Google, AVGO, even a little bit higher, but again, still a miss in this situation. What did happen is our previous month was a little bit low. December was a little bit lower, but has gone up a bit, now at 24 out of 32. Oop, let me change that right here, 24. Yeah, 75% hit rate on average, 96.27% returns on average. In addition, you'll see here Netflix, APP, Tesla, DAL. These ones have gone higher, raising our average return rate for previous months. Same with October. Same with September. Some notable ones, UAL, United Airlines, Delta Airlines. Some of our previous users may have noticed there were multiple callouts for some of these with STAX AI over the course of time. And you'll notice these returns are pretty great. 300% for DAL, Delta Airlines. 1,500% for United Airlines. Pretty crazy when you look at it. Numbers on the right column over here to the right of the dates are the number of days it takes for it to hit those highs. We'll talk a little bit further about that in a moment as well, because again, a lot of the questions that we tend to get are, how long should I hold on to these STAX AI prints? Should I just get into them right when they're called out? A lot of questions that we'll actually go over, and thank you again to Matthew for going over these numbers with us to help come up with some better strategies for you guys. As you look further back, these light orange rows mean that these have now expired. I do apologize. There are a few of these that I didn't necessarily get a chance to update completely in terms of the new recorded highs, but generally every single one of these was already a winner. So just to say that our average return rate could potentially actually be a little bit higher if these ones, I just didn't get a chance to double check them before they were removed off of the options. But if you do have a way for me to go backtrack on some of these historical option prices, please let me know. That way I can go through and finalize some of these numbers in terms of it. So we scroll further back, CEG, Constellation Energy, Amazon, DAL, Delta Airlines, Amazon, AVGO, Broadcom, UAL. You'll notice a lot of these have some pretty great returns, well over 100% in terms of those returns. Peloton, CLS, Apple, Dash, AXP, American Express. And just like I said, well over 100% for many of these, if anything in the higher range, right under 100% for some of them as well. So keep in mind, a lot of these happen to be where they're purchasing, and on this very far right column over here, the number of days that they're purchasing in terms of those options contracts. Well over a year in many cases. And again, with our STAX AI, we're always filtering to see where they're really putting their money where their mouth is. So anything where they're spending over $1 million on these out of the money, unusual type of contracts, that's where our STAX AI will filter and help us determine what are some options worth getting into. As I scroll further back, as you may see, the bulk of everything from the end of 2023 to almost the beginning of 2024, a lot of these have now expired. They originally did start off buying quite a bit of time, and these now have expired, but you'll see still some very high return rates in terms of those. Just like how Matthew got involved here, I do want to point out, if you do happen to have some good experience with spreadsheets, with numbers, with calculations, statistics, and things like that, and you see something that you might be able to help us determine further concrete data from, please let us know. We can always share with you guys this data so that we can try to come up with some stronger strategies and come up with some better data to help people out. One thing I do want to note is that I understand today's February the 6th. I've had a couple days to work on this, but again, I do have to go through each and every one of these options prints individually and manually to double check where the highs are. So if you have a way to help me do that in terms of an automated way, that also decreases the margins of error in terms of what I'm trying to do manually. So on average return for everything that we have here, for all of our prints from STAX AI, we're looking at a 227% average return. On the hit rate side, we have a 92.71% hit rate. And again, like I said, for this last month's update, we do have 57 of these prints from previous months that are now higher. This chart that we have here shows just about everything from every single month, our overall numbers as well. As you can see, like I said here, January 93.75%, and we have a 64.99% return. Sorry about that, that's my dog. Let's go into some other numbers from this, just because, again, I get it, there's a lot of data here. Let's show you guys some of the real numbers of what's going on. In terms of all of our 288 prints that we've had so far, 86% of them will return you at least 10%, okay? When you look at over 25%, we're talking about almost a 75%. So 3 out of 4 of our prints will get you 25% in terms of a return on the minimum. 57%, over 50% return, and just under 47.92% of them get over 100% return. So again, you know, pretty insane numbers when you think about it. You got to see these numbers to believe it. When you know, in terms of the market, everybody's trying to beat the S&P 500, but if you can, you know, get into some of these positions and get yourself out at a proper time. Keep in mind, you're never going to time the top, but if you can return 100% on over 40% of these prints, you're going to do quite well. All right. Over 200%, we're talking 29%. And I also have these other numbers. Out of our 288 total prints, we have quite a few. We have 3 of them that have hit over 2,000% return. Over 13 of them have over 1,000% return. 15 over 900, 19 over 800, 24 over 700, 27 over 600, 35 over 500, 50 over 400, 65 over 300, and we've already talked about the 85 and the 138 in terms of over 200 and 100%. So you can see the average return curve, it's starting to go a little bit higher, even with the addition of our newest and most recent trades that have gone on from this last month. Hit rate fluctuated a little bit last month. At the end of in December, we definitely had it drop just a little bit, but also with the election news and things like that, we did see some higher returns in quite a few of those previous prints. So again, 92.71% hit rate on 227.34% average return. Now, what I do want to point out too is we had, like I said, Matthew was able to do us a solid one and calculated quite a few things for us. If you have watched our previous trends video that we did, there was this thing that we noticed in terms of our outliers and in terms of return rate. We've decided to remove anything with an IV over 0.6. So in this situation, I think we need to change that, the alligator mouth, anything over 0.6 here. Actually, because in terms of the way IV works in options trades, the returns tended to be a bit lower in terms of those situations. So by removing those, we still had some solid data to work off of. Now, how this works is Matthew categorized everything by the number of days to expiration. By doing so, we have at least 30 data points for each of these to get some solid numbers. And instead of using the mean, which is the average, we used median, because in terms of our data here, it's not a standardized normal bell curve. It tends to be skewed to certain directions. So by using our median days, we're actually able to determine, the better ranges what we should look for. So for example, how this would work is you would go look at your days to expiration. So for example, in here we've got, let's just say this Tesla right here. Tesla, they here have bought 512 days till their expiration. So what we'll do here is we'll go into our numbers and we'll look at that. That's going to be this last row right here, 501 to 760. They bought 512, so that's how many days to expiration they bought. In terms of the median days to high, the median or the middle numbers of these types of trades take 142 days for them to reach their high. On the lower end, you can expect 57 days. On the higher end, 227 days. So that's your range in which you would want to start taking those profits. On the other side of it too, the median profit, 124%. Low end is 36 and high end is 212. So that's the generalized normal range of what you're looking for in these situations. That way you can understand if you're playing a more conservative strategy around day 57 and around 36.51%, that's probably where you want to start looking for your profits. If you're going to go a little bit more aggressive, you can give it up to 227 days, and you can also let it run up to over 200%, 212%. That's where we would expect you to want to take your profits. And so depending on the number of days till expiration that they've purchased, for example, here, let's just take this one, TSM, Taiwan Semiconductor. We're going to consider this 112 days to expiration. Therefore, we're going to look at this second row right here. We're going to give it 10.5 days on is that type of average or the median. Anywhere from 1.5 to 19.5 is the range that you want to be able to use. And in this situation, 53% is considered that type of average return that you can expect. The lower end, yes, a negative 6.02%. On the high end, 113.54%. Now this bottom category that we also have over here is I asked Matthew to go through and remove our outliers. There are definitely a couple of them in here. If you were to go look in here where we're looking at well over 500%. These ones definitely you can consider almost like unicorns. Don't happen too often. I asked him to remove these, especially because there were ones such as Tesla and such as our previous TSM. We had one down here. Let me find it real quick. TSM, which was our biggest winner so far, 2,991%. So basically multiplied that by 30. In these situations, we wanted to remove those outliers to give you guys an idea of what ranges to still expect. So we did remove those outliers, and as a result, have a different set of numbers here. Feel free to screenshot these numbers, save them somewhere, put them in your favorites in your pictures. That way, when you see a STAX AI print, you can go ahead and pull this up and use that to gauge what your ranges are. Obviously, if you guys are in our STAX software, you can always go discuss in the Discord, the main chat, and our STAX support channel as well. If you'd like to discuss it in there as well, that's what our community is there for. If you are already part of our paid Discord channels, that's what we are often and commonly doing. People are discussing whether or not they want to get in, whether or not they want to get out of these trades. If you have any questions about these numbers, any questions about our theories and the way that we do our back testing, please don't hesitate. I do have our help at investorcentralclub.com. We're here to help you guys out in terms of discussion, in terms of whether or not, how our system works and things like that. So don't hesitate to give us any questions that you guys might have. Last but not least, today I want to do a little bit extra for you guys too. One of the things that we've been discussing often, and this is something that also led into people getting into that BABA trade, is this thing called the Wyckoff theory. Wyckoff theory, I will also include the links to a couple of references in terms of PDFs and some readings that you may be able to do to understand this a little bit better. But Wyckoff theory is a theory that was put together by Wyckoff, who is a man who studied the stock markets. You can consider him to be the original Robin Hood, where he started to notice how large money investors would fleece the smaller money, the little people. You and I, in terms of tricking them out of their trades. Okay, what Wyckoff did was he started to study the way that these charts looked, and started to understand how money was being moved from the people to the big money interests. And what he did was he came up with these charts, which were patterns in which a lot of these companies and a lot of these stock market tickers happen to move in, and the patterns that he noticed that would help us determine what direction price may be going. In this situation, we're talking about BABA, where you have these different ranges that I've already labeled, and with the readings that I will also include in the description below. You guys can go ahead and try to analyze them yourself, but what I want to point out are some more obvious things that may be able to help you notice. All right. First off, what we have to look at is volume and candle size. The idea is that when price first drops down to what we call the selling climax, we have some very quick automatic reactions. Price is going to get bought up at these lower ends and react quickly back to a higher end. And that's where we're going to draw our low and our high, right? So if I move this yellow to the yellow, that's going to be the range in which price is going to want to fluctuate between. And the big money interests will always do their best to accumulate their stocks in the lower end of that range. So what you'll notice, what I have down here in the blue volume bars, is that price should be spiking near the bottom. So you'll see right here, price spiked. You'll see right here near the bottom, we start to have price spike. Same with down here, price spikes. Not price spikes, but volume spikes. Meaning that the big money interests are gathering as many of these shares as they can in these lower ranges. Same with down here, you'll see the spikes in volume. You'll also notice on the left side here where these candles, we have these on the daily, these candles and the movement tends to be quite volatile. They're larger sized candles going low and high, low and high. And what you'll start to notice as you get to the right side of this, where things start to curve back up, is that these candle ranges start to get smaller and smaller and smaller. What that means is that there's less liquidity in terms of people willing to let go of their shares at these lower ends, and they no longer return to those lows quite as quickly. Then what we'll start to see is these breakouts. We'll start to see price shoot up quickly and potentially come back for last points of supply, the LPS or the buy up. And that's kind of where we're at right now, not only with BABA, but with a couple of other stocks that we'll see, and I'll show you in a moment too. So this Wyckoff chart, it's something that we also teach in our Investor Central Academy, along with when I look at my charts, I try to see if the STAX is showing these types of trades. I like to have my charts set up and start to notice if they start to buy plenty of calls for long-term, out of the money, along with these chart setups, those give me a little bit more confluence and a bit more confidence that accumulation is actually happening in these situations. One that we can talk about here is Robinhood. Robinhood already had this type of behavior, you'll notice down here, and we'll analyze it really quickly, of those candle sizes again. On the left side here, we have these volatile movements in the beginning. We have a selling climax, and we do have purchasing near the bottom, and near these ends where price gets pushed away from. We have our automatic reactions, and we start to see price retest the lows and no longer make it quite as far down before we start to have what we call a sign of strength. Purchasing comes in, volume spikes at these areas, and it shoots out of this range. It breaks out of this yellow line and goes toward the top. Then what we have again is we have this, we have this sign of strength where it retests certain areas, but just like, for example, this candle down here, it broke down below and shot straight back up, closing back within its range, showing that it did not like the prices below here, that people were purchasing them in flocks and making sure that price stays above. You'll actually see here Robinhood now no longer down at this sub 10 range, now is already trading at about $53 up here. One trade I'll give you here that is also a part of what STAX. STAX has had 2 of these show up in the course of the last month is KWeb. KWeb is a China Internet ETF, so you can expect PDD, expect JD, and BABA to be a part of this ETF, where you have very similar types of movement. You have it bought up near the bottom, you have the candles getting smaller and choppier within these ranges, and we're just starting to see not only that sign of strength, but we're starting to see price break up above. In due time, I do kind of expect that this should start going up. Obviously, there's no guarantee. We'll have to see economic forces. We'll have to see what ends up happening with with the economic landscape in terms of the international political landscape as well. But ultimately, the charts right here, if you were to ignore the noise and the news, the charts right here show that it's heavily being bought up every time it comes back down, and so that we should probably expect this to start to move up. And with our back testing of STAX AI, it definitely is something worth taking a look at. But keep in mind, and this is something I want to point out for today, some of our users in STAX AI were noticing an ER play, an earnings play. The earnings report for ELF, or the beauty company, Elf Beauty. And they're noticing some short-term earnings plays for the upside. And what I will point out, though, is that some of the numbers for this name were actually quite positive in terms of their earnings. Their earnings it wasn't that big of a miss. They had a higher than expected reported revenue, but the stock still somewhat tanked. All right. And I want to point out something that I've noticed with how STAX works and how big money interest works, is that you have to remember that the way that the stock moves has a lot to do with expectations. If a stock is expected to do very, very well, oftentimes you'll actually see it start to run up before those earning reports. If a stock has a report that doesn't meet or is well below the expectations or has lower guidance than expected, that's when you'll see price start to go back down. But there's also situations where you'll see a great earnings report and price will tank, or you'll see a terrible earnings report and price will shoot up. So I always remind our members that in terms of earnings, you have to be very careful. We often call it's a gamble. You have no guarantee, even with the flow data and things like that, you have no guarantee of what direction it might go in. Instead, what I would actually encourage you to do is to use our flow software, use the dark pools to determine whether or not there's a lot of positive or negative sentiment for a stock before the earnings. What you'll often see is you'll see price start to run up or price start to drop because of those expectations. Most of the time, you'll probably want to get out before that report because, again, that report, you have no idea if it's going to end up going up or down afterwards. Okay? So keep that in mind. I get it. It's fun to play some of these. It's fun to be in these earnings run-ups and earnings, blast-offs. For example, you may have noticed recently with Palantir, there were some of these where if you got in right before earnings, you're looking at a multiple X return on your small investment. You could get 5, 10X of what you put in. But keep in mind, what you're also risking is that if it goes against you, you're very likely looking at a minus 99% on that position. So if you are playing earnings, make sure you size accordingly. I never ever encourage anybody to get into these situations with a full portfolio or to push all in, because those situations tend to go wrong, or sooner or later when they do go wrong, leaving you with a blown portfolio. So keep that in mind. All right. With that being said, again, with STAX AI, STAX, and Investor Central Club, we're here to help out. If you guys have questions, if you guys want to sign up for STAX, the links are below. If you want to sign up for our Discord, everything is going to be in the description box. But if you do have questions, you have concerns, please let us know. We're readily available here, help@investorcentralclub.com. Like I said, if you've got questions, let us know. This is Eric here with Investor Central Club and STAX AI. I'm happy to do these back testings for you on a monthly basis. Stay tuned for the next one.